All right. Thank you so much for tuning in. Listen, I just want to thank you for tuning into that last video, right? We are helping this guy out in a major way because he's in a dilemma, right? He's got all this equity in his home. He can get approved for the home equity line of credit, and he's going to have like 6 figures worth of lines of credit, and he doesn't know what to do with it. We're going to hop in and show him, right, how to pay this and eliminate that mortgage and utilize that line of credit to build wealth. Let's get into it right now. And so remember, in the last video, we got into Marcus's situation. He was 6 months. 6 months ago, what did he do? He refinanced into a 15-year mortgage, which means he paid double. He's paying double in monthly mortgage now. All right. So mortgage is a security. All right. So instead of paying $1,200, let's just say, he's now paying $2,400 each month, but he's scheduled, right, earlier to pay that off. So in 15 years instead of the 30 years, but Velocity Banking is going to show him a better way. All right. 2.7% interest rate. What is that? That's amortized. Now, the question is, because we went in on how the value and everything was calculated on the last video. Now we're going to show you that it's not 2 debts that he has now. He's not taking it out of his home equity line of credit and paying the mortgage at the same time so that he's just draining money. No, that's not how it goes at all. Okay. Now, we said that he got approved for a $90,000 home equity line of credit, right? All right. And you know what? You're welcome, right? $90,000. This is home equity line of credit. Now, remember, folks, the banker's going to say HELO, right? But you want a HELOC, okay? Make sure you say it out, like the words. Don't do the acronym. Home equity line of credit. And you got to say this, not home equity loan. That's not what we want. We do want a home equity line of credit. Oh man, it matters. It matters. Absolutely. So they got approved for the $90K home equity line of credit. And we then said, let's go ahead and take $15,000 of that, and I'll leave you with $75K. But let's take $15,000 of that, and let's go ahead and place it towards the $255K so that the $255K can then be subtracted, right? And now the 2.7% interest, instead of feeding off of the 255, it'll feed off of the 240K, right? Which means what? Less interest and more dollars in your pocket. That's better than any savings plan right now, right? So some would say, wait a minute, he still owes the line of credit. He sure does. But you see, there's something called the Velocity Banking method that this person can use, right? The financial allocation method in which they use actually will get rid of this balance lickety-split. So let's go ahead and look into it. Let's say that they made income of $5,000 and they had an outgo of $3,000. Or let's say they had an outgo of $2,000. What would, right? What's left behind? $3,000, right? So we got 5K minus 2K. That equals 3K. All right. So now where is that 3K going to sit? If you said in the checking account, kick yourself. All right. It's going to sit in the line of credit. That's what's going to pay this 15 grand off. The 3,000 will. Now watch this. You're going to pay the $15,000 off, okay, with this 3 grand. And we're going to see how long will it take to pay that off? You see, because they still have to pay monthly towards the mortgage. Yes, you do. And that's no big deal. You know why? Because you're paying it from your line of credit. That's right. Oh, this is beautiful. Okay. And you can actually do this with a checking account or retirement account This is the velocity banking method. It's not just restricted or relegated to lines of credit. But right now, we're using lines of credit. So let's go ahead and take 15K, right? 15K, and divide that by 3K. How many months are they going to be able to pay that home equity line of credit off? If you said 5 months, give yourself a gold star. I'm giving you a gold star. All right. 5 months. Okay. They'll be able to pay that off if the income's 5,000, the expenses is 2,000, and then that 3,000 is sitting in the line of credit. So after the 5 months, what happens? What gets to happen again? Well, not only is their equity increasing, now they can again place this 15K back to the principal. And they're going to do this again and again and again until finally they realize, wait a minute, I don't have a mortgage anymore. Where did my mortgage go? Now these numbers here, it's just a scenario. Okay, the real number that matters is how much is left after the income and the expenses. Okay, so whatever, Marcus, whatever that income is for you, the income and the expenses are for you. Remember, the only thing that matters is the cash flow. Okay, how much is left in that line of credit? That is what's going to pay off the cash flow. You may say, my goodness, there's a whole lot more than 3K left at the line of credit. I mean, it's going to be paid off much quicker than that. Absolutely. And I want to receive your testimony after you pay off your mortgage in like 3 months or 5 months. Okay? Yeah, absolutely. 7 months, 12 months, because that's unheard of. All right. I want you to do it. Stay in contact with me. If you need help or if you need any cards, avin.com connects to your home equity line of credit. And I don't get paid to say that, man. Not at all. And so let's go ahead and and if you are starting out, okay, with credit cards, you need to get the card below. Absolutely. I have it in the description. Okay, please help yourself to them. And listen, I want you to have not only a good day, but a great day. And utilize this velocity banking method, because you know what? It's not enough to just know the velocity banking method. You gotta live it. God bless and have a good one.